Buddy, I'm a couple minutes early. That's okay. I'm gonna hang out and wait for the rest of the crew to show up. How's everyone doing today? Hopefully you guys had a great weekend. Ready to get to work, take advantage of some patterns, some different looks. Can you guys hear me okay? Just want to make sure. Anybody? Nobody? Nope. Ron. God. 4x5, Gary? You know what? I'll take what I can get. At my age, 4x5 seems pretty good. Got all the people. Sydney, welcome. Good to see you in here again. John Hellam, nice to see you back. Insaya, nice to see you. Ron, Safia, Jim, Gary, PFI, Walter, K-Pops, nice to see you again. Hopefully you've been keeping busy out there. Joel, Donna, Craig, Lady P, D, Dr. P, and Alan. Man, we've got everybody in this room. Well, not everybody, but we got a lot of you. Everybody have a good weekend? Man, I was down in Texas this weekend. Woohoo! It's hot down there, guys. I live in a desert and it's hot down there. Holy smokes. How do you guys do it? Just kidding. Can't wait to get back. Guys, my name is Mark Novak. I am the younger brother of the birthday boy, and we're going to go through and we're going to have some fun today. We're going to talk a lot about patterns. We're going to talk an awful lot about rules. They're not going to be my rules, they're going to be your rules. I'm not going to force you guys into trades. I'm not going to force you into following a plan. What I'm going to do is I'm going to help you read your indicators. But before I do that, I always go to forexfactory.com. And this is probably what Gary was referring to when he said all the actions tomorrow. We don't have any news today. Monday, August 28th is a zero news day as far as impactful news. Um, but every morning I come to forexfactory.com and I take a look at the different news releases. And tomorrow at 9 a.m., we've got high impact news, this red box. And these red boxes, guys, can make the market jump and bump and reverse and do all those things that make it very difficult to trade. Um, Me personally, I'm a huge fan of advantages. So every time that I'm getting into a trade, I want to make sure that there's an advantage. And if the market is having a reaction to a news release, well, then that feels to me like it takes away my advantage. So it's important to me to make sure um, that I know when it is. And what is that, PFI? News rule. All pro accounts must have no open positions and orders 1 minute before, during, and after news that follow. Same with FOMC. You saw this from a prop firm when not to trade. And they know that they don't want you messing with their money in the middle of a potential news release. So pretty cool. And that's what we do every morning. And I make this a part of my routine because it really does. It creates an advantage. It creates an advantage by knowing when these emotional releases may come. And my next stop is always nexgent3.com/education. Guys, this is where anything and everything that you need is going to reside. There is the software user guide for you guys that are new to NinjaTrader. This is kind of your one-click how-to. It's going to talk about all the different things, whether it's setting up stops and targets or scaling charts. It really is a fantastic resource just to help you get in line with NinjaTrader. And then we've got the tutorial section, and the tutorial section is everything. Every rule that I talk about, the looks that I discuss, the advantages. Um, Uh-oh, John, you got a new computer? Yeah, nice. Was it buy one, get one free? I heard that your little brother wants one too. Happy birthday, big brother. Everything that I talk about, guys, comes from the tutorial section. There really are no secrets. So, Sydney, John, I can't stress it enough that we don't hold anything back from you. The goal is to get you exactly where you want to be. And the goal is to get you there as quickly as possible. And there's a pretty simple path to get there, ladies and gentlemen. I say this at the beginning of every class because I do believe in it wholeheartedly. And it begins with posting your trades in class. And this is for the brand new user to get feedback on everything that you're doing. As you learn the software, as you learn to read the software, the more you share with me what it is that you see on your screen, the more pictures that you share, the more that you write on those pictures and saying, hey, Mark, this is what I see. Am I reading this right? Mark, this is what I'm thinking. Is it the correct line of thinking? What you're going to find is you're going to get some amazing feedback. On Thursday, we had a big breakthrough about some termination conditions with the gentleman. We've done it with 50-50 trades, with all these different things. And all I need is for you to post your trades in class. And then the second half is tracking your trades in the spreadsheet that Nexgen provided. If you go to your Nexgen Study Picks folder, you're going to find that spreadsheet. And the spreadsheet is an amazing tool. It's got a couple different pages. The first page is going to be the copy of your tracking. Every time you take a trade, guys, I want you to put it into the tracking sheet. Talk about what you see, how you felt, how the trade worked out. But the most important thing isn't just to put it into the spreadsheet, right? Don't just phone it in. Study the previous trades the next day. Go back and look at what am I doing? What's working for me? And really, what's not working for me? Between posting these in the spreadsheet and posting these same trades into Classroom, what we're going to do together is we're going to identify your patterns. We're going to identify the patterns that are bringing you success. We're going to identify the patterns that may be hindering you just a little bit. If your chart read is just a little bit off, we're going to be able to adjust and focus and get you to where you want to be. So it really is. It's a relationship that we have here. It's a lot of conversations that we have here. And a little bit of study every morning is it's gonna prepare you for the day. It's gonna set you up for success, and it will, without question, accelerate the learning. The more times you see something that's working, the easier it becomes to follow that path. So post your trades in class, get them into that spreadsheet. We're going to take the first hour to learn the trigger line and Fibonacci rules for when it's okay to trade. I know there's only 20 of you in here, but I want to remind you guys, those of you that are further along, just because I talk about the high probability trend trade every day doesn't mean that that's the only trade available. But this class is designed for the brand new users initially. We're going to get you in. So we're not only going to talk about the rules for when it's okay to trade in that high probability trend trade, but we're going to be able to apply those rules to the advantages for you chart readers that are a little more advanced. Need you guys to simulate daily. Don't wait until you think you have it down. Don't wait until you think you understand the rules completely. I want you to get in there and break rules as a brand new user. But more than anything, I want you practicing getting into the market, getting out of the market, moving stops, and writing down everything that you see. Simplify is what we're going to do, guys. We're going to focus on 2 trades during the day. There's about 3 trades that Nexgen teaches. There's about 1,000 trades that you guys are going to develop over time. But we're going to keep it simple and focused initially. We're going to commit to a rules-based trade, and then we're just going to learn the looks so that they're easy. And that's repetition, and that's where the spreadsheet comes in. Every time your rules are met, every time those advantages are in place, you should take a picture. And what are your personal trade setup looks? What are the trades that you're going to commit to that are going to get you into the market? Yours and mine may be different, right? Mine and Ron's may be different. But the final page is this client page. And this is your best looks. And I'm going to put my spreadsheet in the room so you can look and see what clients are doing. You can look and see how plans develop. And what you'll notice is that most of these trades just revolve around the simple rules that we teach. And they revolve around the advantages that those rules produce. So we're going to talk a lot about, for the first hour, a high probability trend trade. This is a foundation trade, guys. This is a trade where every indicator on each chart agrees for the trade. This is a trade with your highest probability of success. This is a trade that's going to have the strongest triggers and nothing in the way between you and your targets. This is a trade that revolves around identifying advantages, and those advantages are going to teach you to read your charts. 90% of what you do during the day, and I really think 90% may even be a low number, but 90% of what you do during the day is going to be chart reading. You're going to be recognizing advantages. You're going to be recognizing when it's okay for you to take a trade. And then that other 10% is going to be you actually taking the trade. But your chart reading is a skill, and guys, this skill is going to carry you to the next level, and it's really going to take you through the rest of your trading career. But you're going to be able to open up a workspace, and you're going to understand fluently where the market is likely to continue, and then you'll be able to use that continuation point for any type of trade that you're taking. You'll understand where the market is likely to go. This is going to help you create targets and expectations based on momentum and Fibonacci. And then finally, you're going to understand where the market is likely to stop. And these are what we call termination conditions. And guys, I can tell you right now that termination conditions, these areas where the market is likely to stop, once you learn to embrace and respect them, it's going to keep you out of an awful lot of losers. It's going to keep you from trading into areas that may reverse the market. But more importantly, I think for the new user, is when you understand these termination conditions, if they reverse the market, if these areas where the market is likely to stop make it go the other direction and your rules are met, that creates the highest probability trend trade that we teach, that high probability trend trade. The trade that typically wins 70 to 80% of the time when the rules are met. And it's a trade that revolves around three advantages. And these advantages are universal, any chart, any time frame, any market. But these three simple rules for the new user are locatable on only two charts, keeping it simple and embracing the idea that this doesn't have to be a difficult endeavor. And once you recognize that it can be simple, that it can be easy, that it can be focused on a small spectrum rather than looking for everything, I think that it creates that foundation, and that foundation creates confidence, and then that confidence takes you to the next level. So for the first hour here, we're going to focus on two charts. We're going to focus on a large chart first. The large chart leads the way. And from one bar on this large chart, you're going to recognize quite a bit. You're going to understand the overall direction of the market. You're also going to be able to recognize momentum, and it's going to define your areas. And this is a very broad stroke of a brush. It's a slower chart, but from your large chart, the first two of three rules are going to be met. And those first two rules are going to provide you the advantage of momentum as well as the advantage of a clear path. Absolutely nothing between you and your targets. When those advantages are in place, and we are going to discuss them and look at them visually, you're going to turn your attention to a smaller, faster chart. And this is going to be your refinement chart. This is when you take that broad stroke of a brush and you kind of, I love the word whittle, you whittle it down. And you're going to pinpoint that area where the market is likely to continue. And by doing so, you're going to be able to reduce your risk, maximize your profit potential. And rule number 3 of 3 happens on the smaller, faster chart. This is the chart that's going to get you into the market because of the advantages that were on the larger chart. So we're going to look at, the 3 rules for the high probability trend trade. And what they do is they create a recipe for a trade. And for this high probability trend trade, a trade is momentum, it's a clear path, and it's an entry area. And we're going to piece those 3 together. And by doing so, you're going to be able to take a trade, identify a trade that typically wins 70 to 80% of the time. This trade is going to teach you to read your indicators, and your ability to read your indicators is what's going to really take you to that next level. So I'm going to go to the tutorial section here, and we're going to go to rule number 1. T3 trigger lines defined. Your trigger lines are going to do a couple things for you, and you're going to use them in everything that you do. But the first thing that those trigger lines will do is they'll define the trend of the market. When your small trigger lines break above the large, it'll paint your background green on your large chart, and that means we're in an uptrend. And you should only be looking for rules to be met for high probability trend trades long, going with the trend of the market. When those small trigger lines break below the large triggers, we're in a downtrend, and because you're in a downtrend, only looking for rules to be met for high probability trend trade short. And this really is, I think, the first advantage that you give yourself, because what you'll find is that if you never fight the trend, it's going to keep you out of a lot of problems. And then another reason to never fight the trend is that in order to have rule number 1 met, in order to have that strong trigger line, well, your small triggers must be above the large triggers. These solid lines break above these dashed lines, smaller here, larger here. And it's that separation, that space between the two that lets me know that the odds are favorable for the market to continue in the direction of the trend. And you're going to hear in class quite a bit, odds favorable momentum. From that point where the smalls separate until they return, this is when we have that absolute strongest trigger line. And when we have that strong trigger line, when we have that momentum, this is the most favorable look for using that smaller, faster chart to buy a pullback, to get to that next area with all that momentum. And on the large chart, because it's so slow, it's going to look like one bar with a tail or a wick, if you'd like. But this is a full retracement. This is a big pullback on a small chart, and you will, as a Nexgen user, be able to pinpoint where that tail is most likely to continue or to form, and that'll be your entry point where the market is most likely to continue, to use that momentum to carry you to the next potential area. And then in a downtrend, the small triggers must be below the large. That's what creates that downtrend. And then when you have the separation between the small and the large, this is when the odds are favorable for the market to continue down. Once again, you see those tails or those wicks, and those become potential entries for the Nexgen user to take advantage of that momentum, to take advantage of that trend, to get into a trade where the market is likely to continue. This is your first advantage, and this is the one that should set the tone, that should have you looking for a trade, that odds favorable momentum, because when the small triggers work their way back into the large triggers, we call this a weakening of the large triggers. And when you weaken large triggers, anything can happen up or down. It becomes a little bit of a crapshoot, right? You can see that the market has momentum, the strong trigger lines, it moves up. The smalls work their way back in. Next-gen users, brand new users, are done looking for that trend trade at this point. You're recognizing that the advantage is gone. And what you'll find very often is that these weekend triggers, these anything can happen triggers, precede a reversal in the market. Smalls return back to the large, that momentum's going away, and that's what gives us that little bit of a bounce. So it's easy to stay focused on the absolute best of the best as the new user. We go from odds favorable to anything can happen. Notice that the market reverses, and we're not even adding the benefit of Fibonacci yet. We're only using these trigger lines to gauge whether or not the momentum is advantageous. Ultimately, we get odds favorable. There's one of those tails, one of those potential entries, and it carries all the way up to those anything can happen triggers, which once again precedes a reversal. Creates odds favorable, and then we get indecision. The trigger lines don't match the color of the background. The smalls don't match the large. They're not working together. This is visually, and you can see this to avoid getting caught in it. Buyers and sellers are fighting it out. The people that move the market are battling for supremacy, and you see that indecision. You see that struggle in the trigger lines because the trigger lines can't figure out whether they want to go up or down, whether they want to be red or green, whether they want to match the background. And just embracing the idea that strong trigger lines lead the way, that that's your best of the best advantage, it's going to keep most new users out of these areas of consolidation when the fight is happening, because this is where new users are tempted to predict what the market's going to do. They're going to try and predict, well, I think it's going to go up. I hope it goes up. I wish it would go up. And if it does, oh, my life is going to be great, right? But that's just an opinion and it's just a prediction. So if you wait for that odds favorable, it's going to create the advantage. So I always ask the classroom, and I love it if you reply, is everybody okay with odds favorable momentum? The idea that that best of the best momentum should start the looks to get you focused on what the market is doing. And of course, this is Monday, but if we go back on the S&P, you're going to see that it doesn't happen all the time. Let me take all of my indicators off except for the triggers. And you'll see when those smalls begin to separate, the market continues down. And when the smalls break away from the large, you can see it go up. You can also see that indecision right here. The triggers are up and the trend is down, and sure enough, that transition phase drops us into what appears to be a short, just at the tail end of momentum, and that market carries all the way up to key areas. Once again, odds favorable, the market pushes down. There's those potential entries. The triggers get closer to the large, showing the slowdown, and that precedes the reversal. And there it is again, guys, over and over. You're going to see this odds favorable momentum, and you're going to be able to watch the market continue in the direction of that trend. And what we're doing is we're just building trust right now. We're building trust, the idea that this first advantage, momentum, may even cover a lot of mistakes that new users make. Once we have the momentum, once you have the momentum, you're going to make sure that there's nothing in the way. You're going to be sure that you have a clear path, that there are no termination conditions. These are those areas that are likely to stop the market. In the areas that might stop the market, that may stop the market, I'm going to give you this. This is your key to what you're seeing on your charts. The lines on the chart that may reverse the market are divergence highs, a magenta line, divergence lows, that cyan line, fancy way of saying teal or aqua, um, yellow one-to-ones, red Fibonacci resistance, and blue Fibonacci support. All of these areas may reverse the market, but in order to be sure, to understand whether or not they are likely to stop the market, it's a simple comparison. It's a two-step process, new users. Um, and the first part of the process is that price reaches an area. And guys, this is the only reference that we're going to use for price when deciding. So price reaches an area, and that means that these dynamic Renko bars come down and they reach Fibonacci support in this instance. When price reaches an area, and here's the key, you're going to ask yourself, where are the trigger lines? Price starts the process of looking, but your trigger lines will define whether or not a termination condition has been reached. If these price bars, dynamic Renko bars, reach Fibonacci support, and all of my trigger lines remain above, then I've reached an area that may stop the market, that may reverse the market, that may create a bounce that's untradeable. Because we're not the only people that see these Fibonacci areas, that recognize them, that respect them. The same people that move the markets are going to react to these areas, whether it's Fibonacci resistance or Fibonacci support. So rule number 2 says that if you reach an area and the trigger lines haven't broken, no more trades for the moment. Sit on your hands, and that area is either going to hold and the market will reverse, or the area is going to break. And we consider an area broken. So up here, price reaches support, and all the trigger lines remain above. We know that there's no short trades into that area because it takes away our advantage of a clear path. But as price continues through, you'll notice that your small triggers and your large triggers get to the other side of that area of support. Now we consider this area to be broken. Now the path is clear because small and large get beyond the area. And you'll notice that support begins to act as resistance. You'll also notice that with this odds favorable momentum and this clear path, there's one of those potential tails pulling right back to resistance. And this is where Nexgen users are going to look for that high probability trend trade. And you'll be able to use both the momentum, the direction, and the idea that Fibonacci is off in the distance to create an intelligent target where the market is likely to go. So for the brand new users, it's really very simple. It's a simple recipe. If price reaches the area and no triggers break through it, there's no more trades in that area. It may create a reaction. And then if both the small and the large triggers break through the area, not price, right? But the trigger lines, the small and the large trigger lines break through the area, well then resistance begins to act as support. And with that odds favorable momentum and clear path, there's one of those tails, one of those potential entries on a smaller, faster chart. Guys, this is your most basic, most simple approach on how to identify termination conditions. You're going to see them at the top. We have a divergence high, that magenta line means there was a loss of momentum. This on its own is not a termination condition because price didn't reach this line. Price created this line. It's when price comes back and gets to that magenta, now we have a termination because the trigger lines remain below. This is what we call a pivot stop out of a divergence high. It can be a very powerful termination condition. If it creates a full reversal, we're going to call that a strong top. That becomes the precursor for the highest probability trend trade that you can take. Price reaches resistance, even with odds favorable momentum, the trigger lines remain below. Same thing off these one-to-ones. Guys, there's your picture for terminations at a low. And here's the exact same scenario going the other direction so that you can recognize these termination conditions at a high or at a low as well. The high was first, this is the low. Price reaches the one-to-ones, and look at the indecision in the market. Look at the struggle between buyers and sellers. Look at the reversal bars up and the reversal bar down. Look at the indecision in the triggers. Rule number 2 keeps you out of that mess. It keeps you out of that scenario, and it keeps you patient and calm. Either the area is going to break or it's going to reverse. And if it reverses and gives you that odds favorable momentum, we're going to call this a strong bottom, and this becomes the precursor for the highest probability trend trade that you can take. Support, no triggers. There's one of those pivot stop outs, guys. So this is your visual. If you're brand new, put it in your spreadsheet. Study it every morning. Understand where the advantages are and where they are not. And then embrace the idea that it can be simple. And for the high probability trend trade, you either have a clear path or you don't. Rule number 2 is either met or it is not. But we're becoming chart readers, right? You're getting great at looking at your charts and taking the information, and you're going to make decisions based on patterns over time. And guys, I love the growth process because all of you are going to go through it. There's going to become a scenario where you can recognize with your familiarity of odds favorable momentum, and you're going to understand with your ability, hey, John P., it is someone's birthday today. It is John Novak's birthday. He turned 54 today. 54 years this world's been lucky enough to have him in it. Pretty cool stuff. I know, right? Small triggers through the area, guys. And check this out. Those large triggers haven't made it yet. I know from simplicity that both the small and the large must clear this resistance area for it to be considered broken, for me to have a clear path. But when the smalls, 50% of my triggers get through an area, and when my large remain below the area, guys, this is going to put you in what we call a medium probability scenario. And this medium probability scenario is going to be your first trade outside of the high probability typically. This is a trade where we use momentum and trigger lines to determine that this area has the potential to break. Strong triggers break things. And when you have this much momentum going in, it does have the potential, but it's not broken yet, so it's not a clear path. So I like to share this picture because most of you are going to embrace trades that don't have the clear path. It's going to be that medium probability. But when you do, your ability to chart read is going to make sure that you don't sacrifice momentum, and it's going to make sure that you're getting in at the best of the best entry spot. So you will grow outside a high probability. That's why I share this, because you're going to see a lot of these trades in class. And medium probability trades really become the majority of what you do throughout the day. But let's reiterate a little bit. Loss of momentum on a pivot, not a termination condition. But when price reaches that low, when it reaches that divergence low and all the trigger lines remain above, we get one of those pivot stop outs of a prior divergence. And this is your pivot stop out. This is your pivot. This is your stop out. Triggers remain above. Off it goes. It becomes a strong bottom if it creates a full reversal. You'll also see it from a top, and this picture reminds you that 90% of your day is really going to spend reading those indicators. It's really going to be waiting for those advantages to materialize. Resistance, triggers below, no long trades. Support, triggers above, no short trades. Sitting on your hands and waiting for advantages. Ultimately, we get one of those pivot stop outs at a divergence high, but it correlates with Fibonacci resistance. So we have a pivot stop out, and we also have resistance acting as a termination as well. It just adds power to the top, guys. When these areas come together, creates that reversal, gives you odds favorable. There's one of those little tails, a potential entry for a short trade after a termination, that highest probability trend trade that we teach. One more directly into those one-to-ones. Absolutely no trigger lines break through. Remember that price getting there is only the first half. The important thing is that the trigger lines don't break. That's how we recognize that it may stop, bounce, reverse. So it becomes a pause. Let's give it just a second and see what happens. And look, it creates a bounce right into resistance. Resistance holds and pushes it right back down. And you get this fight between buyers and sellers. Ultimately, this termination creates a full reversal. The large triggers go from red to green. The smalls give us odds favorable momentum, but we're still dealing with Fibonacci resistance. Then the small and the large get above resistance and it begins to behave as support. The smalls are outside of the large, and there's one of those tails. There's that highest probability trend trade, that entry getting you in at the best of the best spot on the smaller, faster chart. Terminations that create a full reversal from a low or a high are what we call a strong top or bottom, the precursor for the absolute best of the best. Is everybody comfortable with the recipe? Give me a Y in the room, especially if you're new and you're working on these things. Price reaches an area, and if none of the trigger lines go through, for example, right here at these 1-to-1s, we know to not go short, even with the odds favorable momentum. And look how it turns the market, guys. In the middle of the night, these termination conditions are true. Right off of resistance, and it pushes it down to support. Right off of support, pushes it up to resistance. Resistance holds. Resistance to support, that indecision. And guys, you're going to see it every day, all day. And you're going to get to the point that you realize that these areas may, in fact, slow down the market. They may stop the market. They may reverse the market. And the advantage of a clear path is no longer present when termination conditions are true. And then one more termination condition that you're going to see on a smaller, faster chart. The only termination condition that you're going to recognize and respect on a smaller, faster chart is going to help you identify change that's happening too slow on a larger chart. And we're going to be able to use three divergences, three of those slowdowns, those losses of momentum on a smaller, faster chart to recognize that the market may be turning, may be pushing the other direction, even if it's momentarily. So three divergences in the same price range may terminate the trend. This look becomes even more powerful when the small triggers work their way inside of the large triggers. Remember, that's what we call anything can happen triggers. So visually, we're seeing these three divergences as well as weakened triggers. And then it becomes even more powerful still. If from a low, that third divergence is higher than the previous pivot, creating a head and shoulders pattern, or from a high, that third divergence is lower than the previous pivot, creating that head and shoulders pattern. And guys, you're going to see this at a low and you're going to see this at a high. And these divergences are going to allow you to recognize change that may be happening. It's going to, sorry, I got a little note on the side there. It's going to allow you to see that the market may push up or the market may push down, and this is going to become an opportunity for you to manage trades. If you're in a short position and three divergences print from a low, it's going to allow you to manage out of that position, to take profits, to get to break even, to give yourself the best chance of preserving that equity. Same thing at a high, but you're also going to see these looks when the market may have a clear path but hasn't reached an area. Three divergences may signal a push up. Or even if you have odds favorable momentum and nothing in the way, those three divergences on a smaller, faster chart may help you identify that the market may push back down. So termination conditions are designed to give you the advantage of a clear path or understand when that clear path isn't there. And once we have these two in place, all we have to do is find an entry. Just have to locate that area where the market is most likely to continue. And this really is kind of my favorite part. I think it's magical, is identifying where that market is likely to continue. And rule number 3 says, I skipped a picture. Rule number 3 says that we're going to use a limit order, meaning that you're going to literally wait for the market to come back to you. And you're going to use that limit order to buy or sell a pullback, a small retracement in price that's counter to the underlying trend. And you want that pullback to be an area inside of favorable large triggers. So you're going to put all the language together, and what it's going to do is it's going to tell you that when your large chart, which is defining momentum and direction and areas, says that it's time to look for an entry, you're going to abandon the ideas of the large chart. You're going to say, okay, I'm no longer looking at this chart. I want to come to the smaller, faster chart, and I need a small group of people that are going counter to the trend, counter to the momentum. I want them to give me a push down. Next-gen users, we don't fight trend or momentum. It's a recipe for disaster, but there's always people that will. And these are the people that are going to push the market down, that small retracement that goes against everything, and it's going to push the next-gen user to his perfect entry, to that area inside of favorable large triggers. So we're going to put it all together in piece, how to find that area. When the rules are met on the large chart, your small chart says go. You have strong triggers, the background is green, and you should have what we call favorable large triggers. And favorable large triggers mean that your large triggers, which are the smooth large triggers that are native to your smaller, faster chart, and your synthetic triggers, which are just the large triggers from your high time frame. That's it. The same chart that defines areas and momentum and direction. These are the large triggers from that chart. These are the large triggers from your small chart. And when they work together, when they overlap, when they're one on top of the other, this is your best case scenario. This is what we call favorable large triggers. And favorable large triggers are going to reduce the size of the spot where the market is most likely to continue. And when it does that, it's going to help you reduce risk dramatically. So I am going to give you this picture. Favorable large triggers are the best of the best for the brand new user as you grow outside of being a brand new user. As your chart reading increases and improves, you may look at other trigger scenarios, but I'm giving you that platform, that best of the best. And you're going to see them here, large triggers, synthetic triggers, one on top of the other. We have odds favorable momentum. The background is green. And since trend trades come from areas, we're going to identify fibs, mid-bands, and yellow one-to-ones. But we want them to be inside of these favorable large triggers. And this is all we've done is we've made the decision that it's time to take a trade. I've identified my trigger lines and I've identified my areas. And now I need that small crowd to give me a push. And it starts with a reversal bar. And this reversal bar signals the beginning of a pullback. And I want that pullback to be to an area inside of favorable large triggers. So when the reversal bar prints, good morning, Abdulaziz. I'm going to identify my areas, my mid-band, my fibs, my yellow one-to-ones, and I'm going to create what's called a window of opportunity from the highest point of support, this mid-band, to the lowest point of support, these yellow one-to-ones. In this box, from that highest point to the lowest point, or if you're looking for a short trade, from the lowest point of resistance to the highest point of resistance, this becomes my window of opportunity, and this is the area where the market is most likely to continue. This is rule number 3 being met. This is your area where the market is most likely to continue. Next-gen users will activate a limit order right at the top of that window, a tick or two above that highest point of support. Because of the momentum on the higher time frame, we're going to take our entry at the highest point of support inside of favorable large triggers for this trade. And then, nothing to do but sit on our hands. If the market pulls back and reaches that 79.21 area, that highest point of support, we're now in a long trade. We're in a long trade with the advantage of momentum, the advantage of a clear path, and the advantage of having entered at an area inside of favorable large triggers. Because it's a window, remember your window is from the highest point of support inside of favorable large triggers to the smallest point of support, or the lowest point of support inside of favorable large triggers. Because we created a window and not an exact to the tick spot, we're going to be prepared that the market may go to the bottom of that window, that it may push through that mid-band, that it may push through Fibonacci support, and it may make it down to that lowest point, those yellow one-to-ones. And at this point, if it does, we're still inside the window. We're still at that point where the market is likely to continue. But what you're going to be able to do with Nexgen by reducing risk is you're going to be able to manage your risk. And you'll be able to put a stop beyond that window of opportunity, where the market shouldn't go. And this is important, always trading with protective stops, because we can identify where the market should go from. Anything that wins 70 to 80% of the time, right, It's obligated, just through basic math, to be wrong 20 to 30% of the time. 20 to 30% of the time, that stop may get hit. And that's okay, guys. That's a normal part of doing business, right? That's your rent payment. That's your supplies bill. Anything that wins 70 to 80% of the time has to lose 20 to 30. And the key is you don't know which 20 to 30 it's going to be. But what you do know is that when the three advantages are in place, you're taking a trade that has been proven through repetition, through study, to win more than it loses. And that creates a statistical advantage. And statistical advantages should be the basis for every plan. So what we're doing right now is we're creating a plan that gives you a trade that has been proven through study to win more than it loses, that gives you the ability to manage your risk, and it gives you the ability to maximize your profit potential because you're waiting for that pullback to the best of the best area. And it's a trade that you are developing trust in through repetition, recognition through repetition. And 70 to 80% of the time, this is the most typical outcome, profit target reached. Because you wait for the pullback to the area inside of favorable large triggers, your risk is reduced. And because you've waited for that pullback, the distance to your profit target is maximized. You've reduced risk and maximized profit potential. Guys, this is your first trade. This is your foundation trade. This is the trade that teaches you how to identify advantages. This is the trade that teaches you to use 2 charts and 3 simple rules to get in. And what you'll notice is those tails on a large chart, the bottoms line up with support or resistance on a smaller, faster chart. We don't trade the tails, we just look for the advantage of momentum and a clear path. And then we'll use that smaller, faster chart to enter the market on the pullback. And this is a trade that you can study, that you can go back historically and circle those tails when the rules are true and see how they line up. Guys, is everybody comfortable with that? This isn't shackling you to anything at all. This isn't the last trade that you'll ever find. But if you allow this to be the first trade that you get good at, it teaches you to read your charts, guys. And that is such a valuable skill. We see weak triggers at resistance, and look how the market bounces. So let me see if I can find one of those examples where we circle a tail. There we go. Smalls are still outside of the large. The large are wide, they're down. We've gone through support, it's acting as resistance. There's a potential tail. And if I scroll back on my smaller, faster chart, there's my pullback, and there's that midband right inside of favorable large triggers. And this becomes the recipe for success. This becomes your best of the best, exactly what you're looking for each and every trade, so that you can start recognizing those advantages, guys. So I'm going to do a couple things as we wrap up the first hour. And the first thing that I want to do is I just want to give you a checklist. For my brand new users, for you guys coming back and looking for consistency, this is your high probability trend trade checklist. This is a checklist that identifies the advantages, and it allows you to police yourself. It allows you to have a set of rules to write on the chart so that you can make sure that you are in fact trading with odds favorable momentum and no terminations, that you are waiting for that best of the best area inside of favorable large triggers. So this first picture, the annotation picture, is going to help you not only give me the best information to give you the absolute best feedback, and Craig G, if you get in the habit of writing your rules, oh my gosh, that's so small, it's going to help you be consistent. It's going to help you do the same thing over and over. And Craig, I don't know if you know this, if you click this little white arrow up here, it can bring things closer to price. And I'm just going to try and blow yours up real quick. Because the more information that you put on the chart, the easier it is for me to talk to you about what you're doing, right? Whether you're coming from a termination, if you have odds favorable momentum, get in the habit of writing it. Pull back to an area of resistance right inside of favorable large triggers, right? And you took it right to Fibonacci support. Craig, everything about this trade is beautiful. Termination creates a full reversal. Full reversal gives odds favorable momentum. Odds favorable momentum, you get into the trade before it comes down and reaches Fibonacci support. So Craig, what we want to do now though is you want to start writing those rules out. You want to start reminding yourself that this was a great trade because of the momentum, that this was a high probability trade because I hadn't reached an area, and that because I waited for the area inside of those large triggers, it created an advantage. It created a manageable trade. And then you used that momentum to take you to where the market was likely to go, right? To take you right to that Fibonacci support. And then rather than hoping, it gave you an intelligent opportunity to take profits. Nice job, Craig. Great trade. And this is what we do. We talk about the rules, and then we're just going to look at them. We're going to talk about them. And guys, I'm going to talk about the advantages that I see on your chart, and I'm going to talk about the potential problems that I see on your chart. But if you relate everything back to those three advantages, momentum, terminations, and finding that area where it's most likely to continue, what you're going to be able to do is repeat the trade, to take the same trade with the statistical advantage over and over. So here's the checklist that reminds you of the rules that you're looking for. And here's the exact same checklist. I'm going to drop this in the room for my new users, for you guys that need it a little more visual. You're having tech issues with sound. Guys, anyone else? Give me a Y if you guys can hear me. Okay. We'll see if we can get Sydney in and out. Right on. So guys, here's that exact same checklist. Here is that high probability trend trade checklist. And I have liberated, it's my favorite word, I've liberated pictures from the resource materials. Whoops. What is a good top or bottom? Well, it's a termination that creates a full reversal, and there it is, the picture straight from the manual. What are odds favorable momentum? What are strong trigger looks? There they are, that separation between the two, and those little tails pointed out, and it reminds you about that anything can happen scenario. Termination conditions, triggers through, triggers not through. And then guys, I think this is probably going to be the best picture for most of you. This is the one that defines your window of opportunity. This is the one that reminds you that it happens inside of those favorable large triggers, that you wait for the reversal bar, and that the areas outside of those large triggers aren't within the window. And it shows you exactly where your limit order goes. And this is defining your entry, guys. This is defining your best of the best. That high probability trend trade checklist is nothing more than an entry. And then I'm going to give you one more thing. I'm going to give you a simple plan, guys. If you don't have a written plan, you don't have a plan. And when you don't have a plan, you find yourself subject to emotion, to opinion, right? So here's my disclaimer in big, bold letters. This plan is a stepping stone in your learning journey. It's designed to optimize your chances of success with the high probability trend trade, or that first medium probability trade, that 50-50 trade. So I've included both into the simple plan. Through simulation, study, class feedback, and continuous practice, you'll be empowered to craft a plan tailored to your needs, right? Based on your experience in reading the indicators. This is the plan that keeps it simple. This is the plan that offers the highest chance of success for the brand new user. This is the plan that's going to help you learn to read your charts. This is the plan that's going to help you learn to manage your trades. And this is the plan that'll be the stepping stone for what will ultimately become your trading plan. Notice that it says never fight the large chart direction or triggers, because as a brand new user, as you learn to read your charts, you're not going to have the ability to read them fast enough to make exceptions, right? So let's focus on the best. Using the advantages of the high probability trend trade, you'll spend 20 days focusing on entries. And what you'll find is that once you're good at those entries, the management side becomes a little easier. because every great entry creates a manageable trade. Um, and it takes a minute because managing a trade requires you to read your indicators, and that's what these entries are teaching you. So a mechanical approach, a pragmatic approach, a very methodical approach to management typically is the best approach for new users. And these are the pictures that are in that simple plan. Finding your best of the best entry. This is your priority. Putting your initial stop where the market shouldn't go, and understanding that for every 10 trades you take, 2 or 3 times, this stop gets hit, and you don't get to decide which one it is. So you get to the point where every time your rules are met, you're going to enter that trade, and you're going to wait and see what happens. If your stop gets hit, dust off. Say next. We're going to wait for that next great advantage. Um, or if it doesn't get hit, and the market gives you a reversal bar, you're going to be able to reduce your risk. You're going to put your new stop a couple ticks behind that reversal bar. And now you're just waiting. Once again, you're powerless. No opinions, no emotion. Either your first profit target gets hit or you get stopped out. And guys, I'm telling you right now, losing trades are a normal part of a positive equity curve. But if your first target is hit, your first target based on this simple plan is only $100, guys. It's $100. But this $100 is going to do $1 million worth of good for the new trader. It's going to get you excited because you've won. It's going to give you a dopamine kick, right? It's going to give you that serotonin. You're now a winner. You're now developing confidence through the memory of success. And more importantly, you're going to move your stop to break even. You're going to have absolutely nothing to lose. And you're either going to get stopped out break even after that $100 is in your account, or it's going to go to your second target. And if it goes to your second target, that's a $300 trade, new users. That's $300 on a high probability trend trade. That's $300 that was obtainable through a methodical checklist-based entry and a methodical approach to management, teaching you to read your indicators. And like I said, every great entry creates a management opportunity. So from each great entry, you're going to begin to recognize when you can hold for bigger moves, when your trigger lines, when your clear path suggest that the market will go to that next area. You'll be able to have a trading plan, a management plan based off those great entries, where you're going to start to understand through your chart reading when divergences tell you to manage out of that trade. And that's the goal for each and every user, guys, is to take a very pragmatic, methodical approach, turn it into the most simple possible plan, and find a level of success from it. Take these trades that win more than they lose. Get comfortable, get confident, and then work your way into one of those medium probability trades, one of those 50-50 trades where the area is not broken but has the potential. And there's the same ideas there for management, for entry, keeping it pragmatic. So I'm going to give you guys this simple plan. Absolutely nobody is obligated to stick with it, but I encourage you as a brand new user, give it 5 days and see how it works out, right? Or if you're not where you want to be as a trader, simplify, go back to it and say, hey, you know what? I'm not getting where I want to be. I know that these win more than they lose. Let me get back on track. And then once I get that confidence back, I'll move into that next step. And then for you guys that are beginning to explore beyond those two options, I created a template for you because what I find is that after the simple trades, everybody abandons the idea of building a plan. And I wanted to give you guys just a little template to help you to create your plan outside of the simple plan. So guys, this is what I do. Every time I add a new trade or a new market or a new scenario, I need to make sure that it's repeatable. I need to make sure that it's testable. And my results should produce a trade that's been proven to win more than it loses. And because it does, it creates a statistical advantage. So I'm going to define my entry, whether it is a momentum style trade, whether it's an HVA trade, whether it's a counter trend trade, an edge trade, guys. I will never tell you how to trade, but I'm going to teach you how to make sure that the trades you're taking give an advantage. Write down your rules. What do you need to see? Create a checklist for it, right? Keep it simple. And then this is the most important thing. Go find 10 pictures of that checklist-based entry. Go find your long entries, go find your short entries, and what you're doing is you're committing these looks to memory. You're making these looks easy through repetition. You're creating recognition through repetition. And you're putting them into your spreadsheet. This is my favorite trade setup. Whether if it's an HVA trade, I should have 20 pictures of that high volume area trade. If it's a counter trend trade, I should have 20 pictures of that counter trend trade and the rules it took to get in and what it looks like. And then you have to define your management, right? Because every trade requires a different form of management. So guys, this is just a little checklist. Use this as you expand beyond. And what it's also going to do is it's going to put you in a scenario as you begin to study these new trades and take these new trades. It helps me understand what it is that you're looking for, which means that I can help you identify patterns. I can help you through management, right? Sophia's momentum trade, coming from a termination with odds favorable momentum, no areas in the way, and then a little stab back to a one-to-one. She tells me exactly what she's looking for, which means that I can hold her accountable for what it is that she's looking for. It means that we can make sure that what she's doing is repeatable. And she can go back, and Sophia, if you found 20 pictures that look exactly like this, more often than not, would the results be what these results are? That's the question that you have to ask yourself. That's how plans are developed. Sophia, beautiful trade, by the way. So guys, that's our first hour. Our first hour is designed to help you understand what it's going to take to learn to read your charts, focusing on the entries for the high probability trend trade, posting everything that you do and everything that you see in the classroom so that you can get feedback. Repetition, recognition through repetition, guys, understanding that trading is a marathon. And more importantly, understanding that the way you see something may not be the way somebody else sees it. So there are no wrong trades, right? There are no trades that are incorrect. There are no trades that just because they're not a high probability trend trade shouldn't be taken. But the trades that you take should be testable, they should be repeatable, and they should provide a statistical advantage. And guys, the third page on this spreadsheet are next-gen client trades. These are the trades that fit the rules for the clients. And what you're going to find is that they all revolve around the advantages, whether it's odds favorable or a clear path or perfect entries. And you can go through and you can study and you can look at these and you'll begin to see a lot of similarities in the trades. You'll recognize that that odds favorable momentum really carries it, right? Or those entries are giving virtually no risk. So I'm going to encourage you to create your own plan. I'm going to encourage you to learn to read your charts, but more than anything, I'm going to encourage you to post everything that you do in this room so that I can give you feedback, so that you and I can discuss what it is that you're looking to do. I can help you with it, and we'll get to where you want to be. And what's cool is the further along you get, guys, the more everything else does make sense, right? The more everybody else's trades begin to make sense. The more the lessons that I'm sharing with K-Pops or Safia or Gary begin to resonate with you. But remember to trade your plan initially, guys. Keep it focused. Keep it on what your best of the best is. And what you'll find is that you'll end up anywhere that you want to be. Any questions about the high probability trend trade? Any questions about annotating a chart? Any questions? Feeling good about it? Now it's just rinse and repeat, guys. Now it's just repetition. Over and over and over until it becomes easy. Over and over and over. If you make a mistake, post it in the room. Let's fix it. If you have a question, post it in the room. Let's answer it. Weak triggers at resistance, right? The smalls are through, the large are not, the momentum's gone, and look how the market rockers down. And PFI, you know the rules by now. I'll go back and I'll answer that question as soon as I get to your chart. I got you, but guys, I'm going to take a quick little break. And when I come back, we're going to start looking at your charts. We're going to start answering your questions and giving feedback on everything that you're doing. So post them in the room. I'll be back in 5, and we will start the second hour. get back to it. So I'm going to scroll up to the top of the chat room, and I'm going to start clicking on pictures, and let's see what you guys have been doing, what you see, trades you're taking. We're going to start with Joel today. And remember, guys, that I'm going to give feedback based on the rules that you put on your chart. I'm going to try to take every chart that I look at and refer it back to those three advantages. So we're going to look for the advantages of momentum, and we're going to look for the advantages of a clear path. And whether we have an entry area that is high probability or not, we're going to always go back to those three advantages because everybody's in a different place. Joel has it annotated. He does have odds favorable momentum, and there's definitely a clear path. He hasn't reached support. Look at the pullback right to resistance, right inside of favorable large triggers, and it becomes a great opportunity. He takes profits, not only at Fibonacci, but halfway there. Joel, picture perfect, 100% rules-based trade. Nicely done. And then there is the same picture. The trade's so nice, you post it twice. And then we get into one of those 50-50 trades, one of those not quite a clear path. The entry is perfect. It creates a manageable opportunity. And then Joel, that divergence prints, and you choose not to exit the trade, and it results in a loser. And guys, if you go back to that simple plan, and of course you're going to grow outside of it, but on those 50-50 trades, going back to those plans, just reminds you that divergence can kill one of those potential to break areas. Make sure that you're paying attention to that. Make sure that you're managing those trades as you get into a medium probability scenario. Sydney, desk looks good. And then Safia takes a little different approach. Safia is using the idea of termination conditions, areas that may stop the market, and then using a couple extra indicators with her chart read to recognize taking a shot before everything rolls. If you're a brand new user, this trade's probably terrifying for you because the momentum is up, right? The direction is up, the triggers are up, everything says up. But Safia's been reading charts long enough now, and she's been studying and looking and repeating these patterns that she's using a range chart to identify a potential top, getting to the right side of her trigger lines, and then looking for the opportunity down to the conservative exit, and when everything supports it at the conservative exit, continuing the move. It's a beautiful trade, it's a great chart read, and it fits Safia's plan. And that's the most important thing, is the trade you're taking, your trade, right? Is it the best of the best for you? Safia, nicely done. And then, who gets to be next? Craig, let's see what you got, my friend. And then Craig, embracing that momentum style trade, the way people have been lately. Termination creates a full reversal. Full reversal gives odds favorable and a clear path. And Craig, you just look for an opportunity to get in on a smaller, faster chart and take profits on the way up. Again, embracing the idea that momentum and a clear path leads the way, and then taking a little different approach to it. Nicely done, Craig. Gary, termination condition. No rules met, so you didn't take a trade. Nothing wrong with that. But identifying the termination condition, and it takes you straight to the termination. Just doing a little chart reading to wake up the brain. Nothing wrong with that. Termination, anything can happen. Loss of momentum, second divergence. Not taking that trade to try to finish the move. And this is one of those instances where you've got a loss of momentum, but you do have a clear path, right? All the triggers are above. Maybe a shot to get up to that key area. Nice read, Gary. A lot of chart reading, guys. Every picture doesn't have to be a trade. Termination, determination, determination. Guys, this is how we identify a market that's consolidating. From support to resistance to support to resistance. This is where Nexgen users have this amazing opportunity where you can say, hey, you know what? Rule number two is not there. Rule number two, I don't have a clear path. Because I don't have a clear path, I'm going to make the decision not to trade into these Fibonacci areas that may hold. And what you'll find is quite often it's going to keep you out of trouble. Great reading, Gary. Just keeping yourself focused on the best, right? Keeping yourself focused on making sure that advantages are in place each and every time you take a trade. Ron C. coming through. There is that. Everything says up. There's nothing in the way. Why not make a little money on the way? Ron, beautiful, consistent, over and over. The same trade over and over. There it is again. Everything says up. The momentum's in place. There's the entry. There's the exit. Consistency, ladies and gentlemen, is the key. Consistency. Making sure that everything you do is testable, repeatable. Aw, missed you too. You were right about those Texas seasons, by the way. Hot, really hot, not so hot in February. I was laughing. Gary doing the chart read, termination with a little bit of overrun. And then since the HVA is headed into that support with all the trigger lines above, the large trigger's a full bar away, you're saying I'm just going to wait for advantages. Waiting is free, right? Doing nothing when there's nothing to do is free. And look at that, that termination held, and you're just caught in that range on the S&P, guys. It's Monday. They're waking up too. All right, PFI, good morning. You're learning about the HVA market flow trades. Was there a buy signal here? I don't know. So PFI, yeah, you did a great job of it, Gary. And I think it's awesome because we recognize that that's a pattern, right? So it gave you an advantage coming into today to not take those trades, and I think that that's awesome. So you're one chart short, PFI. How could I answer that question? If I can't see it, then why are you looking for it? And I didn't tell you to remove it. I said learn the best first, right? But how could I possibly? So let's talk about it though, right? And this is a great example. So PFI, an HVA trade happens at termination conditions. It happens from tops and bottoms. And if we are right in the middle, right here, it's not coming from a top or a bottom. And this is a fluctuation on a small, fast chart. So I'm going to say no, it wasn't. Like this is a 5-1 chart. This is 5 ticks of movement. That's not a trade. That's not coming from areas. Um, and I love the HVA trades, PFI. And guys, for those of you that don't know what an HVA trade is, let me go back to the user guide. And maybe this will give you a little bit of an example, PFI, or a little bit of an option. So the market flow HVA trade, I'm a huge proponent of this trade. I love this trade because the first thing it does is it takes your knowledge of high probability trend trades and it takes that ability to read your charts and it rolls it into another way to make money. But it starts with a good top or bottom. So PFI, you have to have that termination condition that creates a full reversal. You have to have that no triggers through termination um, for that good top or bottom, right? Putting you in the place from a termination. And then you have to make sure that you're not trading into an area. So Gary has his termination. Where was Gary's picture? Gary has his termination condition, but he's into a termination condition. So that next rule isn't met. And then what you're looking for, PFI, when you add that third chart, that range chart, is it's going to develop what we call an HVA line, a high volume area line. And that is the biggest concentration of buyers and sellers, whether it's a green line or a pink line. But when you've got that top, when your triggers start to roll and you see that line, These pink lines right here, or these green lines, can create an opportunity. But you have to have that third chart, and you have to have that termination condition, and you have to have those triggers roll, and you have to have those lines. It's an awesome trade. But the cool thing is terminations come from the high probability trend trade. Trigger reading comes from the high probability trend trade. Where the market is likely to continue comes from the high probability trend trade. So this becomes the next study piece. So PFI, when you start looking for them, there's that template where you can write in your rules and go through, start that process, right? Like after the market, start that process of going through and looking for those rules to be met. And what you're going to do is you're going to create a recognition based on your ability to read the charts. So I'm glad that you asked about it because hopefully it clears it up a little bit. He said which one was an 80, 90%. Show me a picture of the one he was talking about. This one right here? John Novak, if you're in here, what's your 90% winner trade? Let's see a picture so I can help these guys catch it. We'll get there though. HVA signal. Okay, so what he's talking about, PFI? Oh, thank you for telling me that. So if I go to, dun, 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 I know exactly which one he's talking about because I love it. So what it does is watch this. So if you have a high probability trend trade, I'm going to find the picture of it right here. What he's saying is that if my rules are meant for a high probability trend trade, if I have strong triggers, if I have a clear path, and my area where that trend trade is most likely to happen, that point where the market is most likely to continue, PFI, if it lines up with a high volume area, it just adds strength to the trade. That's like everything coming together. The heavens are singing. Does that make sense? It starts with the rules for a high probability trend trade. It starts with exactly what you're getting great at right now. And then if you look over at your market flow chart and there's one of those giant pink lines when the rules are met for a short, it just makes you feel great about it. You're like, oh yeah, here we go. Um, so absolutely. See if we can find another one. Maybe not, but you'll see it a lot. You'll see it where that HVA comes in and it just kind of helps the trade a little bit. You're coming from that good top, all the triggers are below, the path is clear. So it creates a couple extra opportunities, but it all stems from the beginning. It all stems from the rules being met and making sure that everything is exactly what it needs to be. So great questions, man. Um, Great picture, great opportunity to expand a little bit beyond the basics and then start looking. And then what you'll do is you'll just so PFI, scroll back. Let me give you a great way to practice that. Scroll back with that high probability. Take those two charts and look for rules met trades, right? Or look for opportunities. And this is the S&P. Look for that clear path, not quite there. Everything says up. Pull back to support. And then let's see what that looked like on this chart. And there's your pullback to support. And then open up your market flow chart. And what's it look like on a market flow chart? Well, there wasn't an HVA line, but what you can see and what you can do is you notice how your market flow chart had odds favorable momentum, right? Here you had iffy momentum, but you had a clear path, you had an area. You can start using market flow charts as confirmation tools a little bit, confirming that you do have momentum in the direction of the trade. And then if it lines up with one of those pink or green lines, it adds a little fuel to the fire as well. And then down here at the bottom, here's your HVA trade. Here's your termination with no triggers. There's your triggers rolling, and there's that green line that sets you up for the long. And look at how far that long goes. But that's your HVA trade right there. Does that make sense? Maybe not yet, but this is the HVA trade that helps you catch that good bottom. This is a great trade to add to your plan. And then when you already have that bottom established and things are going, those HVA lines can help you find another opportunity on the way. So great stuff. Let's see, who's next? All right, Safia. Keeping busy this morning. And that's that one that we talked about, guys. This is taking your ability to read charts and turning it into another trade. Taking that odds favorable momentum, taking that clear path, and just looking for an opportunity that maybe isn't a high probability trend trade, but still embraces all of those advantages. Takes that ability to read a chart and translates it into a trade that makes sense to you. And there it is again. And notice, Safia, I'm so proud of you right now. So check this out, guys. I want you to see this. Odds favorable, everything says up. This is an important part. This is a huge important part of trading plans. I want you to look at her entry. And I'm going to do this. I'm going to take two pictures. Nothing but the entry. There's one. And then let me take this one. And this is one of the most important lessons that I can ever give new users. This entry is the same entry going the other direction, right? So that's where that consistency comes in. That's where if you're designing a plan, Safia, those start to go into your pictures of the perfect entry, right? Over and over. But doesn't it feel good when you're like, I've seen this before. I know this look. This is the one that wins more than it loses. Guys, this is really personified. Um, how to do it. And what does your market flow chart say? Your market flow chart says odds favorable momentum with nothing in the way. It's just another chart, right? So let's use the exact same ideas that we use. I don't know. You added that on there. Nope, that's your outer band. So market flow charts have, it's just an outer band. There's your outer band. There's your outer band. There's your mid band. It's just a channel. But when you start getting well beyond the outer band, unless it's just a really strong trending market, it has the potential to turn a little bit. So in your picture, you're coming back inside from way outside. And you have odds favorable momentum, right? And you had that termination on your larger chart. So it's adding fuel to the fire. It's a confirmation of the momentum that you needed to take that trade. It's putting you in a position where it's odds favorable, odds favorable, odds favorable, right? Everything says go, and you went. And then you took your exit right at your next pullback to the one-to-ones. Do you see it? You still had odds favorable. You still had odds favorable. You moved too fast. And it pulls right back to those one-to-ones. And this one, that one would fit your rules. Great trading, Safia. And then termination conditions for days. That's awesome. You do have the good top, right? Termination. But Safia, one of the things that you have here, and guys, let's talk about another termination. And you took advantage of it, right? Probably held too long. This will be a lesson for the entire class. Thank you, Safia. Here's my large triggers, all the way up here. So I have 1, 2, 3, 4 areas that haven't broken. Does that make sense? It's a good top. But there's no indication that any of these areas are going to break yet. That's a lot of support. But I think the most important thing on this picture is, guys, I'm going to talk to you about a termination that uses those large triggers, that helps you understand expectations. And it's what we call the gap theory. And the gap theory says that if price accelerates fast and far away from these large triggers and reaches an area and the large triggers are more than a full bar away, price is likely to close that gap. And this happens on your large chart. This is a large chart termination condition. So if price accelerates away from these large triggers and reaches this midband becomes a termination condition, and price is likely to close that gap. And you see it. This looks a lot like yours, Safia. Multiple areas the large triggers don't follow, and price is likely to close that gap. Same thing here, right into the area. It's likely to close that gap. And this isn't designed to get you trading against those triggers, but what it does is it keeps you out of that short trade. This looks a lot like it too. It keeps you from trying those short trades when really it's likely to close that gap back to the large triggers. And I think that you pulled one off here, Safia. But understanding that midband, that support is right there, and these large triggers are so far away, maybe it gives you an opportunity to manage a little tighter, right? Momentum in, momentum out. And I think that's, as you use that new checklist to develop your management plan, what you're going to find is that any trade that derives from momentum, that uses momentum to enter, well, then a loss of momentum is kind of it's that equal opposite reaction that creates a management opportunity. And then that gives you an opportunity there as well. Just recognizing the gap theory in place. And you're absolutely right, and you said it. You start looking at that small chart and forgetting that the large chart leads the way. And that's a normal part of just kind of putting things into perspective. Still great trading, great chart reads, and maybe just a way to do it a little better. And then Sydney, talk to me about what you're seeing here. I love the pictures. What do you see? Always. Remember, guys, when you post a picture in the room, tell me why you posted it. What am I looking at? What's it mean to me? There's a termination, and there's a 50-50 on the short, and there's no divergence, and there's a perfect entry. After 3 divergences, and then that was your trailing stop as you come into the areas. All right. Jared, nice trade. Guys, let's look at all the different things that his trade uses that high probability trend trade teaches you. It starts with a termination condition on the large chart. It starts with an area that may reverse the market. Price reached Fibonacci resistance and no triggers broke through. So Jared knows this might stop the market. It may reverse the market. And what's cool is there's that next lesson that we had. There's 3 divergences in the same location, just really verifying that this is more than likely going to reverse the market. And then he waits for the smalls to get below the large. The large are wide. They're angled in the direction of the trend. We have momentum off of a termination. It's now a strong top. Jared says, I'm going to take that pullback to resistance right there at those triggers, and I'm going to get paid. Jared, I don't think you could have done this one any better, especially on a 1 lot, right? And then, Jared, one thing, I know you're still working on your plans, and I see that you're still on simulator. Why not turn that one lot into a two lot? Why not start taking profits on one and developing that large chart recognition, and let's see if we can get a little more out of it, or maybe that 100 and 200, so it keeps you from forming opinions and trailing too tight, and it's going to help give you the confidence to start getting more out of these trades. Yeah, so a two lot, it's still simulator, right, Jared? And because it's still simulator, you still have nothing to lose. It's just great lessons. And you can incorporate something like this that still gets you focused on your chart reads, but it starts to really, once you take profits on that first one, you did this one on Sim because it's not your normal trade, right on. But once you get profits on the first one, it makes it easier to hold that second one because you've already been paid, right? And then everything says down, gives you an opportunity to get to 80-40. Great trading, Jared. Nice job. All right, Sydney. Same picture. Can you hear me, Sydney? What do you see? Help me out here. Is this a picture helping you identify termination conditions? Because if it is, it's brilliant. Let me show you all the options. And guys, this is why I love writing on pictures. Because what's the idea on pictures, guys? The idea on pictures is to create recognition through repetition, right? So I can look at this picture. Sydney, you can look at this picture in the moment, you can take it, and you can say, well, there's absolutely no doubt in my mind that this is a picture about termination conditions. But what's it going to be to you tomorrow? Tomorrow, is it going to be about this termination condition? Or is it going to be about these termination conditions that reverse the market, right? So we can start putting some information on here and associate them with the rules. Here, rule 2 is not met. And then watch this. In one picture, over here I can say small and large through. Now I have a clear path, and I'm drunk fingers. Rule 2 met. So now I have an idea of when it's not met and when it's met based on one picture. And then from this one picture again, I can do this. Whoops, wrong one. I'll just cover that with a call out. And I can say odds favorable momentum, rule 1, whoops. And then I can point down here and I can say term. Whoop, I can maybe get the actual letters in there. Get in there. I'm struggling. There we go. So I can say here, I can say term creates full reversal is a strong bottom. And now with just the simple addition of some typing on your charts, guys, this becomes a lesson that when you look at it tomorrow, you're like, what do I see in just this one picture? I see a strong bottom, and I can recognize odds favorable momentum, and I can identify a clear path, and I can also identify when that path isn't met. And then take it and upload it to your screencast, right? And go over to, how about chart reads? And put it in there. And just say chart reading. And then Sydney, what this does is it creates a recognition. It creates an association of what I see and how what I see compares to the rules. And guys, this is that chart read, right? This is that chart read that begins to give you that confidence in the moment. So watch this from that same lesson. There's my termination that creates a full reversal, right? And you can identify this as a 50-50. But then you can say, oh my gosh, three divergences in the same location, push the market up. And you're seeing this. Yeah, you're so welcome. I'm a big fan of associating what I see with the words that give me advantages. So smalls are through the area and the large are not. Does everybody recognize this? 80-40 had the potential to break, didn't it? With that much momentum coming through. Give me a Y if you see it. This is one of those 50-50 scenarios. I have the advantage of momentum. It's coming from a strong top. Guys, this is a beautiful look, right? But 80-40, it only has the potential to break. My small and large haven't gotten to the other side of it. And then I also see three divergences in the same location, letting me know that the market may push up. Chart reading keeps me out of this short, right? It says, whoa, things are changing even with this look. And sure enough, look how the market's pushing up. Pretty cool, right? It's like a safety measure. And what do we see on NASDAQ? On NASDAQ, I see a divergence high with weak triggers. So I'm at a termination. My smalls are below the large. I know I don't have odds favorable momentum. Is there any reason for me to hope that this market goes up or down? Or can I just sit on my hands and be patient for a moment, right? There's multiple divergences right at that key level. My chart reading keeps me patient. 90% of what I do throughout the day is chart reading. Gary using the idea that if price pulls back to support and all the triggers are above from a bad top, support has the potential to hold. And Gary, nice patience, waiting for price to get on the correct side of the smalls. What an advantage that creates for NASDAQ. And you take it right back up to that termination condition, and now there's nothing to do, right? Quick little snippet. Boom, boom, make a couple bucks, and get out at the trouble. Your chart reading identified the trouble. Your chart reading identified that support was likely to hold, and you waited for the momentum to subside on a smaller, faster chart before you took the trade. Is it a high probability trend trade? Absolutely not. Is it a beautiful chart read? You better believe that it is. NASDAQ has a pattern every day. You just have to understand it. Abdulaziz, termination creates a full reversal. Full reversal creates odds favorable. Odds favorable gets you in at the area inside of favorable large triggers. And your exits happen before the key areas, right? So it's a beautiful trade. And for my new users, can we do this? I'm going to take a picture of your trade. And then if it's okay with you, I'm going to take a picture of this high probability trend trade checklist. And I want you guys to see how easy it becomes to police yourself. And I'm not even going to look at your market flow chart. So new users, is the market coming from a good top or bottom? A termination that creates a full reversal? The answer is yes. Does it have odds favorable momentum? Smalls below the large. The large are wide. They're angled in the direction of the trend. The answer is yes. No termination conditions. Price has not reached the areas. Therefore, it's a yes. And look at this sniper entry. When Abdulaziz enters this market, his stop is where the market shouldn't go. And once he gets a reversal bar, the stop on his trade is minimal. So that's 4 yeses. And 4 yeses create an opportunity to make money. And then Abdulaziz, here's the other half of that one. Are you ready? With all that momentum, look at the momentum coming from a good top. Doesn't it make sense that the market will reach that key area, those one-to-ones, those fibs? So not only is this a beautiful trade that identifies the best of the best entry, but now it becomes a management opportunity to get more out of that trade. when my large chart has odds favorable momentum and a clear path, it creates an opportunity to reach the next key fib area where the market is likely to go, right? And that's really where it is. Yellow 1-to-1 midband. Yeah, right there, right? That's a beautiful spot. But look at the difference, Abdulaziz, and I think that you're going to love this. You got out at 51 and 48. Your trouble spot was 11 ticks beyond your first exit and 8 ticks beyond your second. So what would you do with an extra $180 a trade, right? That's kind of how you look at it. You identified where the market is likely to go, but you didn't let it quite get there. So as you grow and get more confident with the trade, right, with this momentum, you're going to start saying to yourself, oh, that second one is going to have to smack head first into that fib. So even that 8 extra ticks, right, that $80 doesn't feel like a lot on its own. What if you get that extra $80 4 times a day, 5 times a day? That's an extra $400 a day, right? That's an extra $1,600 a week. That's kind of cool. That's starting to compound stuff. That's an extra $6,400 a month just based on the idea that odds favorable momentum is going to carry you to that next area. So it's a great entry. It's a beautiful trade. It's 100% checklist based. It's simple. It's not at all aggressive. It has every advantage in place. And then the next step, right? The next bite of that elephant is learning how to manage it to get more out of it. Beautiful trade. I could teach a class on this trade. I think I just did. Nicely done. Why is it hard to take the same trade in the NASDAQ? Okay, so speed, right? So if the NASDAQ moves too fast for you, and it does for a lot of people, should you be trading the NASDAQ? Not yet, right? But Abdulaziz, do you suppose that if you see the same patterns 500 times over and over and over again, they'll become so easy for you to recognize that they become easy, that in a faster environment, you'll be able to catch them? There's that pivot stop out with weak triggers. Do you know one of the patterns I recognize? Safia, tell me you got a 78.50 entry. It will, Abdulaziz. There was an awesome interview with Tom Brady a while back, and it had Tom Brady talking about just the speed of the NFL, and it was in comparison to a lot of rookie quarterbacks. And they were like, "Oh my gosh, the NFL is so much faster than college. The NFL is so difficult to keep up with the reads and everything going on, and it's challenging and it's exhausting." And then they turned to Tom Brady and they said, "What do you think, Tom Brady?" He said, "You know what? After 20 years in the NFL, it's like slow motion." So Abdul Aziz and all of you guys that are like, the NASDAQ's just too quick for me right now, you'll get to a point to where it slows down and you'll see it. And you'll see these patterns happen, and it'll literally take you a matter of seconds to recognize them. But ladies and gentlemen, give me a Y in the room if you recognize that's a termination condition, isn't it? What a great way to start looking for things when it comes from a termination. And here I have weak triggers. My smalls are inside. Those are anything can happen triggers. I do have a clear path. I don't have areas inside of favorable large triggers. So if I resort back to my safety net, I don't have momentum, nor do I have an entry area. The only thing I have is a clear path, guys. It becomes a problematic trade for me as the new user. I don't have enough advantages to feel good about it. In PFI, it's an amazing trade. But I'll tell you right now, it's a trade that takes a lot of confidence to get into. It's a trade that takes just a lot of a giddy up and pattern recognition. All right, David B. Let's blow it up a little bit. Is this a good top? David B., I go back to the recipe every time when I talk about it. Um, PFI says no. And I'm inclined to agree with PFI. David, I try to always keep it as simple as I can. Price reaches the area. If it becomes a termination condition, I need it to reverse the market. I need a termination to reverse the market. Otherwise, what I have is really just kind of a pivot from space. And I think that's what we see on your trade right here, is I don't have any Fibonacci areas. So I get one pivot from space, and it pushes all the way back to the midband. There's your gap theory. Do you see it? So I know I'm not going short here. And then all I get is a lower divergence. So I get my first loss of momentum. Does that make sense, David? So it's still a pivot not coming from areas, but it does have a loss of momentum this time. And that loss of momentum pushes us a little lower, and it gives us that 50-50 trade. And you didn't have divergence, right? And you also exited inside of favorable large triggers. But because it's not a good top, it takes away the likelihood that this may break. And is this what is this is the S&P? And your window of opportunity goes from, let me see if I can bump this up a little bit. No, it wouldn't, David. It would just be a lower divergence. It would be two losses of momentum. And I think this is where it gets confusing for some people. And that's why I put that picture above. Embrace the idea that as you're looking for good tops or bottoms, they happen from key areas. And it doesn't mean that it can't reverse and go from there, but this increases the likelihood of success on a 50-50 trade. Whoops. Where did it go? This look increases the likelihood of success on this trade. And let's see if there were any indications on your other charts. So this is your 21.3 over here. And your 21.3 is coming off of a bad top. PFI, that gap theory, it's not for termination conditions on the 5-1. But that idea that price returns to the large triggers is what pulls us back to that area inside of favorable large triggers. It's what has us looking for our entries on the 5-1. Does that make sense? Because on the 5-1, we're trading a pullback. But let me finish this one. So, David, your 21 had a bad top that went right to the midband, and the large triggers didn't follow. So there's your gap theory. And do you notice how this largest chart isn't perfect for the short, right? And then your next one down isn't perfect for the short. So your largest chart says we're probably going to pull back up and retest. And this kind of confirms it. This is pulling into those 1-to-1s at the mid band. It's a 50-50. Does that make sense? I'm a huge fan of the 50-50 trade. But if you're going to use this larger chart, if this chart isn't perfect, let this chart be perfect. Like this one's not perfect, let this one be perfect. And the same way that if this one isn't perfect, we insist that this one is perfect. So you had a lot of advantages there. It was just a 50-50 trade that didn't work, David. That's all it was. I just kind of expanded a little bit, but not a good top, because we want it to be that termination that creates a full reversal. Great questions. You're welcome. And then just to kind of compound what you were talking about, PFI, using that two chart scenario, Look at how, let me pull it over. In order to get our best of the best entry on the 5-1, we're relying on price pulling back to those large triggers, right? And it's a little different idea. It's not the gap theory, but when it comes back and corrects and we have a bounce point, that creates our highest probability entry. So it's a similar concept, but we're not using it for a termination. We're just hoping that it happens to that best of the best area to get us into a trade. Very observant. And then Gary, anything can happen triggers with a clear path. Everything says down, you take the short. Things slow down, you get out. You take the short. Things slow down, you get out. 26, I believe, because it's a 13-2. But let me show you how to recognize it. Rather than counting ticks, so on a larger chart, on your 13-2 chart, we just missed it. These trigger lines would have been below this reversal bar marker. Let's see if we can find it happening live. Here we go. Price reaches the area. See this white reversal bar marker? This is the point where this creates a full bar. Obviously, we're not trading into a termination condition, but if these triggers were above that reversal bar marker, if there was room for this to create a full reversal bar before they hit it, that would put the gap theory in play. Does that make sense? Let's see if crude has one. There's your reversal bar, but obviously your large triggers are full bar away. So you can use the reversal bar to help identify, just to kind of double check that those triggers are a full bar away. Here they were. Price closes the gap. And look at the indecision right now. I've got synthetics up and large down. My mid band's magenta, but this is an uptrend. David B, not a good bottom because it's not coming from a termination condition. Yeah. Because of crude oil. So what else do you see on crude oil? Rather than trying to create it, what's a decent trade? Let's go through what we see. Where am I coming from, PFI? Price reach resistance, right? And no trigger lines broke through. So I'm probably not going long. Is it a good top? What color are my large triggers? They're green, aren't they? This was a good top. This one all the way back here at 9:46, an hour ago. It's done. It's done everything it's going to do. And then this bad bottom pulls to resistance. No long trades. From resistance, it reaches support with large triggers up, small triggers up in an uptrend. No short trades, right? Termination to termination, PFI. Termination to termination. And look at this wonky nonsense. These are up. These are flat. Smalls are down. Yeah. So the cool thing is rule number 2 says either let it break through above or let it break through below to create that advantage, to make sure that you're going with everything. Does that make sense? And it's just that little sad realization that sometimes you have to sit on your hands and do nothing. Because right now it says support's going to hold. But it also says resistance is likely to hold, right? And since these are flat, let's wait for some momentum, PFI. Let's at least give ourselves a chance, an opportunity, right? That advantage to look. Does that make sense? And this is a great example of how rule number 2. But when this pivot is formed, that's a good top, full reversal. So now where's the pivot that we're working off of right now? Now we're working off of this pivot. Oh, they're coming. Don't worry. So now we're coming from a bad bottom. And it took us right to resistance. And resistance creates a bounce. And yeah, we're just, man, isn't this awesome? You know where the problems are. And look what it looks like when you do that. Bing, bing, bing. We're just waiting. We're just waiting for it to be great. We're waiting for it to be awesome. Waiting for that clear path. Waiting for that odds favorable momentum. And then once you have it, you're going to pounce, right? Like a tiger coming out of the bushes. Sophia, bad bottom directly into resistance. You want to talk? You want to talk about this one? I'll tell you what I see. You didn't tell me what you saw. Okay, let me know when you're back and we'll talk about it. And we'll come back. Let's go look at the live market, guys. Let's see what's happening. And what do you guys want to talk about? There's a bad bottom that trades directly into a fib with every trigger line below it, right? It may go up. The smalls are up, but the large are down. The large are down or up. The synthetics are down. There's a couple divergences. I don't have odds favorable momentum, nor do I have a clear path. And I can't have an entry inside of favorable large triggers because my large triggers are all down here with no lines. Do you see how quickly the read can happen? But here, I'm at the tail end of momentum. I do have a clear path. And it just didn't reach that resistance right there at the large triggers. It may. Quick reads, guys. That's the goal. The goal is to see something so many times that it takes you a moment to identify it. Develop those moments on crude oil. Bad bottom, straight to resistance. Even had market flow for what? Gary, what kind of trade is it? You said that you had market flow, but what rules were met for that market flow potential? That's what I'm asking, right? K-Pops, one. I follow one market. I devote 100% of my attention to one market, to waiting for the advantages on one market. And I do that because in my own personal experience, if I'm watching two markets and I miss a trade on one, I try to make something happen on the other. I try to make up for that missed trade. I trade NASDAQ. I love trading the NASDAQ. I love the way it moves, and I've done a lot of research. Um, well, remember, I'm 3 years ahead of you. You want to know the truth, though? Is my NASDAQ trades, the trades that I take on the NASDAQ each and every day, they're nothing special. There's no secret recipe for the NASDAQ. I focus on momentum. I focus on a clear path, and I focus on an entry area. 723.67. Is that when you came into this world? Well, happy late birthday. You got me by 5 years. 5 years worth of wisdom. But I got you on chart reading with Nexgen by 3. I know, right? But so on NASDAQ K-Pops, everything revolves around this simple recipe. It really does. And then NASDAQ's got a little different temperament. So what I did, well, I'll tell you my full path. Are you ready? This is how I learned to trade the NASDAQ. And guys, this is for all of you because I think honesty is important. Is I traded the NASDAQ the same way I would trade the ES or crude oil. I used those same basic ideas of momentum and a clear path at an entry area. And then I blew out 5 Apex accounts. Yep, Novak blew out 5 Apex accounts. Do you know why? Because I didn't learn how to trade the NASDAQ, and the NASDAQ has a little different personality. So I said, well, this is ridiculous to keep losing. So I went back to my spreadsheet. I went back and I did the exact same thing that I asked you guys to do to develop that recognition. And I found out what worked, and I found out what didn't work. And what didn't work for me on the NASDAQ K-Pops was fighting the small triggers. When the small triggers were down strong or up strong, anytime I traded into them, or the majority of the times I traded into them, they acted as resistance or support. So what I did is I started noticing this over and over. And I said, wait a minute, when I have all of those basic advantages, all I need to do is be a little patient. All I need to do is wait for a close on the correct side of them. Or I have to wait until they're a full bar away and I grab that entry. So everything that you guys know about high probability trend trades is going to translate to the NASDAQ. It's just got a little temperament. And if you've stolen my spreadsheet, there's some great little things. Watch this. This was a 3-part. The small said wait. Everything says down. The small said don't go short. Financial suicide. Everything says up. The small said wait. Don't go, don't go, don't go. See how they use it as resistance. And then the next picture, the now go picture, is the close on the correct side of the small. Right there inside of the window of opportunity. Same thing. Same exact looks. Now it's a strong top, David. Do you see it? Now it's a termination condition that creates a full reversal. There's your strong top. There's your full reversal. There's your odds favorable. It's still a 50-50, right? Look at that. Beautiful entry. And that thing cranks down. Whoops. David, do you see the difference between the two? Bad top, 50-50 doesn't work. It's a probabilities thing. Good top, 50-50 cranks like it's meant to. And notice that it's the same thing here. Now your largest chart that you have up there supports it as well. You have odds favorable, you have odds favorable, you have odds favorable, you have odds favorable. Every chart says down, every chart has momentum, and you sniped the perfect entry inside of favorable large triggers. David B., what I think you just did here is you just showed everybody what happens when every chart agrees. Nice trade. Beautiful. Great chart read. Does everybody see the difference between not a termination is a termination? It's very helpful. Great job. And then PFI, let's see what you got. Tail end of momentum, I like it. Call the trading desk, Safia. So Safia, have you done this? Do you need to flatten? Apex, log in. You should have this up, right? You went to flatten accounts. You right-clicked in your chart trader, flatten everything, cancel all orders, close button. I'm just going through all the things I know. Which one worked? Right-clicking in the side? That's okay. You're going to make it right back. But it's a great lesson, isn't it? Now you know. Sucks that it was a $900 lesson, but it is. That's all right. I believe in you. You'll make it back. No problem. Guys, it's important to know how to do that, though. If things go sideways, how do you get out sideways? Gary, termination or target? Ooh, that got big, didn't it? Termination or target, Gary? It's a target, right? So you have odds favorable momentum. You're coming from a bad bottom. And this is the NASDAQ. There's those strong small triggers. Why would it be no trade with divergence? PFI, I'm sorry, did I not give you a complete thought? I apologize. I didn't. That's my bad. Sometimes I go full squirrel mode, guys. All right, so PFI, odds favorable momentum. Smalls are outside of the large. I love it. Entry at the pullback. Your path is clear. The smalls are through, the large are not. You pull back to the midband right at small triggers. You got stopped. Oh. PFI, your midband is snuggled up against those large triggers. You're fine. You're fine there. One tick, PFI. They're averages. It's one tick. So let's go through it. Give me Ys or Ns, PFI. Did you have odds favorable momentum? Did you have no termination conditions? None, right? So here's your reversal bar. And maybe this will help a little bit. Because now you're reading into it. You're thinking, I did something wrong, and that's why I lost. This is why we post in the room. These are the areas where the market's likely to come from, right? At the time of the reversal bar, that's your lowest point of resistance. That's your highest point of... No. So where's your window when we get there? That's pretty much it, right? The place that you're looking for, that's your window. Would you agree? Okay. And then your stop is up where the market shouldn't go. Would you agree? PFI, great job. And do you know how you know it's a great job? Because you took the time to write your rules on there, but you assumed, and this is for all of us, guys, this is for every one of us in the room. We assume that a loser means we did something wrong. So PFI, if you take this same trade 100 times, how many of those do you suppose you're going to lose? 20 to 30, right? And that's the hard part for new users. But this is why writing your rules on the chart is so very important. Because what you can do is you can say, you know what? I took this trade and it didn't work out. But I had these three advantages. And when I have these three advantages, this is a trade that typically wins 70 to 80% of the time. And if you take that picture and you put it into this, your personal trade setups, and you see it 250 times, it just reinforces the idea that sometimes the market's going to be wrong. And if you post it in the room, man, I'm going to sing your praises. It was a great read. You had every advantage. It just didn't work. So your only option is if a beautiful odds in your favor trade doesn't work, is dust off and just say next. The market was wrong. We'll let them be wrong with dignity. But when they give us that setup again, man, I'm going to crush it. Look at that support still not breaking. Aren't you glad you didn't go short into support with all the triggers above it? Rule number 2, outstanding. That's a bad top. This is a 50-50, and that's divergence. Yuck. And that's split triggers, not odds favorable. And those are strong small triggers. Oh my goodness. How many things do you need to stay out of the trade? And now that bad bottom's giving odds favorable, and it's going the other direction. Isn't that amazing? Patterns repeat themselves over and over all the time. All you have to do is just keep studying them, post them in the room until they're comfortable. Safia, you ready to talk about your trade? No worries. So I'm going to tell you the first thing that I notice about this trade. Are you ready? The first thing that I notice about this trade is that you didn't write your rules on the chart. You have been consistent 100% writing your rules on the chart, and this one you chose not to. For whatever reason, intentional or not. But I notice that there's no rules on the chart. Okay. But you telling me what you see helps, doesn't it? Okay. So let's go through all the basics. No, it's not. Let's go through all of the basics. Where's the market coming from? Good top, bad top? Bad, right? It's just a pivot from nowhere. Do we have odds favorable momentum? So you do. You have odds favorable momentum. Small's above the large are wide. They're angled in the direction of the trend. This market it's cranking to the upside, right, Safia? I like it. What can you tell me about all of these areas with no triggers through? Termination condition and a gap back to the large triggers. Absolutely, Dr. P. Do you see it now, Safia? And everything about market flow says up, doesn't it? You have odds favorable momentum to the upside. But HVA doesn't mean anything because you don't have a termination. And that's the challenge there, Dr. P, is that this HVA line will convince you to do things that you shouldn't do if the rules aren't met. So, Safia, you do have the momentum. I love it. You don't have a clear path, but I think what I really wanted to show you is that every momentum style trade that you've taken so far today, you let the area break and pull back to it. Does that make sense? Where's the picture of your trades that we put side by side today? Where did I put your picture, Safia? I take a lot of pictures, don't I? There we go. So check it out. You let the area break and pull back to it. You let the area break and pull back to it. These are your pictures of your perfect trade. And then on this trade, dag nabbit, you forgot to let the areas break and then pull back to it. So it's that clear path that got you on this one. Does that make sense? That's normal because you get excited. So which chart were you focusing on, do you suppose? And I think that it supports it over here. I think that your market flow chart supports it. Everything is strong and up, right? But your 55 is directly into resistance with every trigger down. Doesn't really support the long. This chart doesn't support the long because of the termination. Is it possible that you saw the one-to-ones and you just focused on this and you said, man, I'm going to get in. I'm going to catch it real close? Yeah, that's okay. Does that help a little bit with the read, the challenge there? And I think that that's one of those things where consistency, we're having those pictures of your best entry. Because Safia, if you keep going back and you look at the ones that brought you success earlier, it's let it break and pull back, right? NASDAQ's going sideways, but there was that one up here, I believe, too. Let it break and pull back, and it helps out a lot. Let's see if we can find, even without the advantage of the large chart. There's that one again, lets it break and then pulls back. So I can't stress enough just how important it is to post these pictures, right? And it's not that you're wrong. It's not that you did something bad. It's not that you did anything other than made just a small mistake, right? Just a little mistake. But once we identify it, then we're pretty good. There's our bad top. Everything pushes up. And now we're at support with no triggers through. We get a full reversal. Now things are looking pretty good to the upside, aren't they? We had to let it sort out a little bit. Now we're just going to see what happens here. I agree. And I get the same thing, guys. I get the same feedback you guys get. Support, no triggers. I love it. I get feedback every day. PFI, check it out. Now, resistance held. The large triggers are starting to turn. The small triggers are breaking through the area. Now we're starting to get those advantages. Now all the charts agree. Does that make sense, PFI? What a patience piece, right? Because there's a bounce and there's a bounce. And now the smalls are below support. And now the large are starting to turn below support. And now every chart says down. We're coming from a termination. There's that look. And now I'm just saying I hope the buyers fight it. There's my area inside of favorable large triggers. Does that make sense? Pretty cool, right? Do I have odds favorable? Yes. Do I have a clear path? Absolutely. Do I have areas of resistance inside of favorable large triggers? Without question. Can I use my checklist and make the decision that this is a trade that potentially wins 70 to 80% of the time? And I'm just hoping that somebody fights that downtrend, that somebody fights that momentum. I'm not telling you to take the trade. I'm telling you that this one fits my checklist. But do you see it, the patience, right? I just had to wait a little bit. Man, it always gets there, guys. It always does. You always end up with a trade. It just doesn't always happen as quickly as you want it to. So 90% of what we do is reading indicators. John Hellum, how are we doing today? A lot of live chart examples of rules being met, of rules not being met. Isn't this unbelievable? Now we have a termination that creates a full reversal that gives me odds favorable momentum. If I get a reversal bar, I can identify my lowest point of favorable large triggers to the highest point, and then my window of opportunity extends from the lowest point of resistance to the highest point of resistance. And I can pretty much identify this tiny little area where the market is likely to continue. If I get a reversal bar, my job is to put a limit order just below that window, to wait patiently. I'm out of control at this point. I don't control the pullback, whether or not I get filled. I don't control anything other than whether or not my rules are met. And if you put your first one up here and the market moved down, remember, guys, you may have to move your orders with the market. And I can tell you that I've chased short trades with a limit order where I kept moving at 2 ticks, kept moving at 2 ticks, kept moving at 2 ticks, because as long as the rules are met here and the rules are met here, I might have to adjust, but it's still a trade. Great stuff today. Look at that termination condition. Whoa, textbook, right? Anyone try to take the long directly into an area that may reverse the market? Safia, I had the greatest visit ever. It was perfect timing. My oldest son blew up his engine on his car 2 days before I got there, so I took him out Friday and we got him a new car. Well, he got him a new car. I just helped him through the process. He'd never done it. Oh, that's okay. And then my youngest car wasn't working, and I went to school for mechanics, so I got to lay underneath a tiny little Hyundai in 110-degree weather and change a crankshaft sensor. So thank goodness I'm capable. So now both of my boys have reliable transportation once again to get them to work so I don't have to pay their rent. Super Dad this weekend. It was awesome to see them, though. I'm excited to get back to Texas and be close to them. Guys, I'm going to take about 2 or 3 minutes here. I'm super hydrated. When we go into the back end, these last 30 minutes, I want you guys to just start firing questions at me. Definitely. K-Pops, you're up by Dallas, right? Yeah, I was in Austin this weekend. So my wife is halfway through her MBA. She's starting to look for permanent positions. We're either going to be in Dallas or we're going to be in Austin. We're not sure which one, but it'll be one or the other. There's your reversal bar. I've identified the window of opportunity. Guys, am I following rules here? You're there often enough? I love it. Okay. We were in Cedar Park for 3 years. I think that if we go back, we'll probably end up in Cedar Park again, or that north side of Austin. Yeah, we went to the MotoGP races out there. I got to meet actually a long time Nexgen client. Um, it was cool. We hung out, talked motorcycles. I do love Coda. A lot of fun. All right, guys, I'm going to take a few minutes. If your rules are met, take a trade. If they're not met, sit on your hands. If you're brand new, John Hallam, take a picture. Sydney, take a picture. Tell me what you see. Doesn't matter the market. Doesn't matter if the rules are met for a trade. Take a picture and tell me what you see. And let's see how you're reading charts. I'll be back in just a few, guys. you're going to be able to repeat it, right? So Geo down here where you say you shouldn't have re-entered, right on your chart, termination condition, price reached the area, triggers didn't break through. I didn't wait for the entry. Yeah, and you're reinforcing these great ideas. And then Sydney, looking for the pullback, right? Write that on there, Sydney. Right? I'm waiting for the pullback to the area inside of favorable large triggers. Use rule number 3. And I heard that my stop just got filled. So if I'm using the reversal bar, guys, I just took a 4-tick hickey. But my rules are still met, right? It's still an area inside a favorable large trigger. So that's the next step, is management. But Geo, Sydney, everybody in this room, if you start the process, what are your rules? So Sydney, yours was rule number 3 that you were showing me. And go ahead and say it, a mid-band inside of favorable large triggers. Because now you're reinforcing why you wanted to enter the market there. If that's your rules, so Geo, if you're looking for that most basic, if you're looking for that high probability trend trade, a strong top or bottom is, I'm always looking for it. Where's the market coming from? And that's a question that I ask myself all the time. Where is the market coming from? Is the market coming from a termination condition, or is it coming kind of from the middle of nowhere? Because it creates 2 different expectations for me. When price reverses, let me see if I can find David's picture. This one right here. Because if price reverses from nowhere, Geo, sometimes it goes up and finishes that move. But if it comes from a termination, it's more likely to continue in the opposite direction. Does that make sense? And this is really for everybody. So if I'm coming from a termination, it's more likely to go through. Yep, NASDAQ's just trying to work it out, aren't they? The S&P is just trying to work it out. So I go through that process every time. Guys, I kid you not. When I'm looking for trades, all these things that I talk about with you guys all day, all these advantages that I talk about every day, the looks, what they are, that is how I vocalize, and sometimes out loud in my office. Where's the market coming from, Mark? I ask myself that. Is it coming from a good top or bottom? And if it is, I go directly into the next rule. Well, do I have odds favorable momentum? And I'm talking this out in my head every time, the same thing that's on this checklist. Okay, I have odds favorable momentum and I'm coming from a good top or bottom. Well, have I reached an area that may stop the market? Do I have any termination conditions? And I'm asking myself out loud, and I'm kind of demanding that I answer it. Does anyone else do this other than me? Do you ask yourself, do I have odds favorable momentum? And then require an answer before you keep looking? It works for me. It works great for me. And then I ask myself, do I have an area inside of favorable large triggers? Because not only am I looking to see if the advantages are present, but I'm also reminding myself what those advantages are. Where am I coming from? Well, I'm coming from resistance. Do I have odds favorable momentum? No. Am I free of termination conditions? No. And if I don't have that, then I'm just not looking for the trade, right? Guys, this was a mid-band inside of favorable large triggers with odds favorable momentum coming from a termination condition. So let's go into management. Are you ready? You guys are going to love this. Give me a Y in the room if you see that the rules are met. The pullback has already happened, Sydney. But you're absolutely right. The rules are met, right? In PFI, this is one of the things that you said, and I'm glad that you are. As long as price stays inside of these large triggers, isn't it still in the window? It's important that you guys understand this. The rules are met, and there's your window. And it never got outside of that window. It never did. So in the beginning, some of you will put a stop behind the reversal bar like I did, and you get stopped out, right? But as you grow with the software, your management plan adjusts. And as long as you're in that window with the rules met, you stay in the trade like PFI did. So PFI with odds favorable momentum and nothing in the way. This is where management starts, right? If you're taking 100 and 200, well, you've already got paid on the first contract. But there's your first trouble spot, somewhere down here where that divergence happened, right? We're on the correct side of the smalls, the larger down, the synthetic down. And with odds favorable momentum and a clear path, you guys can start identifying where the market may go. Why not use Fibonacci with momentum and a clear path? Does that make sense, everybody? The rules were never not met here. But as a brand new user, I follow a very mechanical plan, and it got me. Nicely done, Abdulaziz. Termination, everything is down. There's your pullback to resistance. You take it at the top of the window. And then PFI, there's that HVA line too that kind of lines up with everything right there at 39.40. And then Abdulaziz, you've got one target at 15 and one target at 20. And you're at zero risk. All right. Great trade, Abdulaziz. Great trade, PFI. All we're doing is we're developing trust, right? We're developing trust in it. So, Gio, do you see how that talk through happened? Where am I coming from? I'm coming from a termination that created a full reversal. Do I have odds favorable momentum? I do. Is the path clear? It is. Where's my area where the market is most likely to continue? And there it is. And then PFI, what has changed since you've entered? The only thing that has changed is that the small triggers are now in favor of the trade as well, right? That's the only thing that's changed. Pretty cool, right? Great entries create manageable trades. You had to wait a little over an hour for that trade. Was it worth the wait? And if you're mechanical and pragmatic as a brand new user, do you already have $100 in the bank? Did you already take 100 on the first contract? Nice. The pink dots act as yellow ones to one. They don't. The pink dots, Abdulaziz, are a small swing one to one. So let me go to the glossary of common terms, and I'll show you what the difference is. But one thing, Abdulaziz, is when we talk about one to ones, it depends on the market. It can. So the yellow one to ones are a 100% alternate. 100%. This is A very common, so common that it worked its way into the software, right? Yellow one-to-ones may stop the market on the large chart, Abdul Aziz, because the large chart defines areas, right? Does that make sense? The large chart defines areas. It defines termination conditions. And that's why we use these yellow one-to-ones on a large chart. Well, there's the small swings, and these are from the tiny little pivots. These are little, kind of insignificant, right? They may create a bounce, but on a small chart, I'm not worried about it. Not a big deal. So insignificant that if they're inside of favorable large triggers, that's not an area that I'll trade from. Oh, where'd your picture go? So you've got these little pink one-to-ones, but they're not really doing anything. They're just kind of there. Um, I like them. They may give a little bounce back to your best entry, but when everything is saying giddy up in the direction of the trade, I love it. And then there's the rules met. Once again, you were afraid that it was going to turn around there. So PFI, you took your first entry right there. This is important. So guys, when I talk about areas for entry, no, you got it at the mid band. Great job. And then you took all your profits. Nice trade. I'm curious if that mid band inside of favorable large triggers with odds favorable, because I'm on NinjaTrader 7 and it doesn't even run them on mine. Guys, were the rules met? This is where management comes in. That's our trade, right? Circle the tail. Here comes your management opportunity. So you're saying because they reversed at pink dots on Friday that they will always reverse at pink dots and you're scared. That's okay. Look at this, guys. That's a pullback to a mid-band inside of favorable large triggers, isn't it? Give me a Y if you see it. This is the next step for you chart readers. Did I have odds favorable momentum? And did I have a clear path? Hell yeah, I did. Guys, if you missed it up here, that was your next trend trade. And if you got in at 27, you've already taken profits on the first, and you're probably break even into this trouble spot. Give me a Y if that makes sense to you guys that are brand new. This was the first trade that came from these advantages. This was the second trade. And how many divergences does it take to be a termination condition on a small chart, ladies and gentlemen? It takes 3, right? Never had it. And look what the market's doing with all that momentum. And if you got in at 27, those yellow one-to-ones represent that $200 profit target. So how do we manage it at this point? If I get a third divergence, well, then perhaps I'll exit the trade. If I never get a third divergence, and I have all this momentum, and I have a clear path, well, shoot, I may go all the way down to 79.95. But it all starts with the talk through. Geo, it all starts with the talk through. John, it all starts with the talk through. What do I see? Where am I coming from? Does it fit my rules? Look at you, Sydney. Nice job. Why not exit at 8007? Go ahead. Which chart defines areas, PFI? Let's talk through it again. What is the large chart telling me? No, you're gonna. I'll go through it. What does the large chart define? Direction, momentum, and areas, right? No problem, Sydney. Great job on that one. Large chart defines direction, momentum, and area. Small chart's an entry chart. Large chart direction is down. Large chart momentum is down. Large chart areas, I've cleared every area that has the potential to be problematic, right? And what's the flip side? My next area is right here. So the only thing between here and here that's going to take me out of this trade is if suddenly I get weak triggers, or if a third divergence prints, right? And what's going to happen? If it comes down and smacks into 8007, what a great place to take profits. But what if it bounces and comes right back to a mid-band inside of favorable large triggers with everything saying down? Can't I just get back in and look to make more money on the move? So guys, this is why I say every day, let the large chart lead the way. Let the large chart define that momentum. Let the large chart talk about where the areas are. Let the large chart establish the direction. Your small chart is an entry chart. And if my large chart says go down with momentum and a clear path, the only thing on the small chart that's going to get me out of this trade is 3 divergences. I don't have divergence yet, right? I won't get divergence until the third potential bar. So all I'm doing is talking through it. If I get a third divergence, well, then I'll exit the trade and I'll wait for another opportunity. If I never get a third divergence, if every one of these trigger lines down in that clear path does exactly what it should do, well, then there's a good chance that this bar pushes down to 8010, gives me another reversal bar, and keeps going. Isn't that amazing? It's everything that we teach, but you've got to get the repetitions to put it together, guys. Everything that we teach. If you find better software out there, let me know. If you find a better educational path, let me know. Everything says down, doesn't it? The momentum is still down. But what happens, guys, is watch the fluctuations. 8015, I feel good about it. And they're making decisions. 8014, that was awesome. No, wait, it's 15. 13. Oh my gosh, I don't know, right? You get antsy. There we go. Momentum for the win again. Large chart still says down. Small chart still says down. Everything says down. And guys, look at that. Congratulations. Large chart leads the way. Right to a termination condition. Give me a Y in the room, ladies and gentlemen. If you see, we talked through the whole thing. High probability trend trade from start to finish. Pretty cool, right? If you don't recognize it yet, it's okay. It doesn't mean that you're bad with the software. It means that you're new. It means that you're brand new. Oh no, Jose. And you guys had it all sorted out, didn't you? We got you back in the game. It happens. Man, it stinks when it happens, but it happens. So PFI, beautiful trade. Abdulaziz, beautiful trade. Uh-oh. Did anything on the large chart ever say that it wasn't going to go? And this is what I want you guys to recognize. Did anything on the large chart suggest that it wasn't going to go to the next area? And then even more so, did anything change on the small chart I hope so. I do too, PFI. Every day. But if you use that initial trading strategy, you might have gotten stopped out of this one and never took the re-entry because you can't piece it together fast enough. Eventually you will. Large chart leads the way, guys. Let me post that picture in the room one more time because this is exactly why we let the large chart lead the way. Because the small chart will talk you into stuff. The small chart's your buddy that just stole a bottle of rum from his old man's liquor cabinet, and he's going to talk you into bad decisions. Small chart's that voice of reason. And it made the move. Now all you have to do is practice until it becomes easy. Nothing to do, right? Pivot, stop out, at support. Now it's starting to create a reversal, waiting for it to hit it. Abdul Aziz, you said you missed the second entry, but you made it to the area. How cool is that, that we talked about it on your last trade and you put it into play on this one? Outstanding. And did you recognize that that's a 21 and not a 13? And it changes the dynamics a little bit? Okay. Just want to make sure it was on purpose. Hey, welcome back, Sydney. Look at your trade. Sydney, you said that you had momentum, a clear path, and an area inside a favorable large trick. Excuse me. And that momentum carried it all the way down to Fibonacci support. So, Sydney, the only thing you need to do now is keep practicing, keep taking pictures. John Helen, the only thing you need to do now is keep practicing, keep taking pictures, post them in the room for feedback. And guys, I don't care what trade you're taking. I don't care if you're a high probability trend trader. It doesn't matter to me. If you're an HVA trader or a momentum trader, I want to see your pictures, especially if you're struggling, especially if you're like, man, I feel like I'm so close, but I'm just not there yet. I feel like I'm so close, but one little thing is missing. I want you to flood my room with pictures so I can give you feedback. That was smalls breaking below the large. That was the large and small below support. That was a pullback to resistance. And Sydney, we're all going to get there. I'm going to tell you guys that right now. The only people that don't eventually get there are the people that don't participate. They're the people that don't ask for feedback. They're the people that lock themselves up in their home and they watch a couple videos and they decide that because they spent money with Nexgen, they're entitled to be a winner. They're entitled to $1 million a year career. And they think that they should get it without study. They think that they should get it without learning rules. So focus on the rules simple at first, guys. Keep it basic. Keep it easy, right? And if you're starting to look for things outside of the rules, use this template. So Safia, for your momentum trade, use this template. Dr. P, as you work on those momentum style trades, there's that template. I don't know if you were here this morning when I introduced it. Use the same process that we used. Alan, same thing. And you can use this for management as well. Go through and take pictures of the management. As you grow through a management plan, let pictures and repetition be the key to getting you to where you want to be, right? And then if you're not sure about the read, just drop it in the room. I love to talk about charts, guys. I love to talk about these looks over and over. And I really do enjoy helping you guys build a plan that suits your needs. And I'll always encourage you, let it come from a great foundation. Just listening, oh, right on. I guess you got to work every now and then, right? And Dr. P, of course, if you go back and do market replay after work or something and you have questions, you can email them to me, right? Drop them in a DM or something. I'm always happy to give you guys my feedback on it. And just because I don't take your trades doesn't mean they're the wrong trades. It just means that they don't suit me. My brother and I take completely different trades, but we read our charts exactly the same. We just have different pain tolerances. He's a little braver than I am, but he also reads charts faster than I do. It's kind of cool. What a great Monday. Great job, everybody. And how cool was it to be able to watch? Oh no, I totally get it. Guys, life happens every time. They just always let me know how I can help. How amazing was it to watch this happen, start to finish? That's a confidence booster, isn't it? That's the one that says, yeah, it does work. I just have to learn how to work it. Every diet, someone told me once, every diet works until you stop using it. Um, I was watching, anyone watch the FedEx Cup this morning? Anyone watch golf? Or this weekend? They had an interview during one of the delays with one of the golfers, and he said that he used to go through and just hit a bucket of balls over and over. And I'm just going to go out and I'm going to hit balls. I'm going to hit balls because that's what practice is. Never worked on anything specific, just hit balls. And his results showed it. Guys, if you simulate without purpose, without focusing on the rules, you're just spinning, right? Spinning, getting reps, getting reps, getting reps. But are they the right reps? And he said what he did is his coach eventually gave him something to work on every time. He said, let's use the data and let's focus on working on the things that are going to bring me success. So what he did is he started working on certain shots, certain shapes, certain putts, and found a great level of success. So as you go through your repetition, as you go through your process, make sure that when you trade, it's with purpose. Ask yourself, why did I do this? Why did I take that short? And why did I not exit that short? Right? And there's one of those pivot stop outs, weak triggers, divergence, and we're waiting for it to sort out again. Is the market going to go up indefinitely here, or do we have to wait? I don't know. We'll find out, right? We'll see what happens. Guys, great day today. I hope you learned something. I hope something became just a bit more clear for you. Thanks. It's good to be back. Have a great afternoon, Ron. I hope that you're beginning to embrace the idea that just doing the same thing over and over yields results. Keep it focused. Don't be shy, right? I'm pretty tame. I'm pretty mellow. I have to go watch my brother's class. I don't know about you guys. I learn something every time John Novak teaches a class. And I usually screw up the lesson for 2 or 3 days, which is always fun too. So, guys, have an awesome afternoon. I'll see you tomorrow. We'll do it again. Let's do it every day for the rest of our lives until we get to where we want to be. I'll see you guys tomorrow. Be good, everybody.